Yo guys, what's going on? Welcome back to another video, and in this video I'm going to be explaining how we ended up catching 365 pips in one day on gold. Obviously I ended up sharing this on the free channel and you guys wanted to see a video on how and why I ended up taking these trades, and yet the support was immense. Thank you for the reactions, and obviously I live up to my word and I will make this video for you guys. So in this video it's just going to be very clear on sort of why I ended up taking these trades, how I ended up entering, what I was looking for, and yeah, pretty much how I ended up selling in a bull market and how I ended up buying the main trade. So this is sort of a shorter term trade I wanted to get out as quickly as possible, and then you can see on the right we held it for a lot longer because that is the way of the trend. You want to continue holding your longer trades in the way of the trend because you know that the likelihood of that playing out is a lot stronger than sort of selling gold, especially when gold is being pumped. But pretty much without further ado, let's jump straight into the charts and have a look at this sort of price action. Now, before I get started, obviously we have a thing to mention that this sort of trade is not one of those TikTok ones where you can see them drawing lines and then they end up getting their sort of position tool, stop loss above the high, and then they play the candles and then it ends up going to their take profit. You know this is not one of them because I end up calling this live step by step. If you guys are in the free group or in the free channel, you'll know that I sent this out while the move was playing out. I even sent out a scaled in entry for the free guys on this free Telegram, which was right about here. Price came back to retest the 5-minute fair value gap. If we are good to continue back, we should get a close back above here for scaled in entries. This is at 6:05, and you can see exactly how the candles looked at that time. It was, I believe the timing, 6:05, obviously, yeah, up there is the New York time at 1:04, so you can see a minute after I ended up sending this out, so it's a 4-hour difference. So you see that price would close above this level, come back to retest it, and then go straight to the target right over here. That's exactly what happened. Price closed above, obviously pushed a little higher. We waited for the retest, got in on this, and then we ended up continuing up. At this point, the first entry was secured. I'm going to break that down exactly why I looked for that, why I was in those two positions, and that was just a quick background on that. I ended up sort of sending these trades out live as the market was playing out. Right, let's stop messing around. Let's go straight into it. Coolio. So we obviously start off with how the market opened and where our targets are. You can see that the way the market opened and where the targets were was this main opening gap that we had here. You can see that before this sort of blue line, let's place a vertical line here, that when the market opened around about here, this target, anything to the right of it hadn't happened yet. I'm not going to use the replay tool in this. I'm just going to sort of step by step take you to see exactly what would have happened. So you can see that anything to the right has not happened yet. So this gap is still not been filled. So that's one of my targets. So you can see that price ended up breaking out from last week, came back to retest on Friday, and then we ended up getting a big push back towards the upside here. So at the start of the week, I ended up marking my targets for Monday, Tuesday, which was this high right here, and I'd marked it across. You can see that from this swing high, price came up, came back down, came back up again, and came back up again, and then still failed to break above here. You can even mark out these highs here as buy side, because you can see that price has still not collected the prior high. It's just sort of building up a liquidity pool above this area. So again, that's my main target for the Monday, Tuesdays, right? So when Tuesday came, price ended up pushing back into this gap, taking out the prior low that we had, and then we were going to watch a reversal occur back over here. So we're going to drop down on the smaller time frame here. Bear in mind, this is Tuesday, a day before the trade that we are going to sort of explain in this video. So I'm just giving you a context of why I was still looking for buys. So on Tuesday, don't get me wrong, this was a very good move that we ended up catching here on Tuesday as well. So I'll quickly break that down, which was above here. You can see that this New York session move here. So in short, we were looking at what price is doing. I'm going to put the sessions on. Now this sort of indicator above here, very good indicator. I do use this. Lux Algo, I'm not gatekeeping or anything, so I don't mind you guys having this. Lux Algo sessions, search it on the indicators, use it, very clear to point out the session liquidity. You can see with Tokyo, price pushed back down here, and then with London, once price sort of was pushing down in the London session and broke out and closed above here, I wasn't expecting any more liquidity to be taken. Why? Because price has already taken out the prior daily low right here, right there, right there. So price has already taken out the prior daily low and it's within a gap. We are very bullish, so we don't want to see price sort of taking out prior lows. We don't want to see price sort of moving lower as any, as more than it needs to in a way. So you can see the prior daily low is taken out from here. Based off the Asia liquidity, you could see that PDL right there. So price took that out, pushed back up, and then we ended up getting a break of structure here during London. Now, I was trying to get involved on this sort of break of structure move. Let's say that's a shift there. We ended up getting a close on 5 minute, came back to retest this order block. It would have been a wider stop loss. I was looking for an entry right here. Price missed us, continued up, right? Now, price is getting very close to this target. Still has not taken it out. At US session, price spiked this target and pushed immediately back down. This doesn't tell me that yes, market's now going to go start selling from here. Why would it do that? We still have a main target that I've got here, and we still have the opening gap over here. So the market's just sort of charging up. It's giving us chances to get in, right? So if I take away the session highlighting, and then I just quickly show you what exactly happened on this trade right here. This is a Tuesday trade, bear in mind. So if you guys are in the free channel, you'll be able to see that on Tuesday, we ended up getting a 1% on gold as well. And that was this trade that I'm going to break down here. So price took out the buy side, right? But did not close above it. It was a quick liquidity collection and came back down before New York. Remember, timing is key. So I'm waiting for New York and after to give us another move, right? So this is pre-New York. So New York opened about, wow, right back there. Okay, and I'll explain why that's a wow moment. So anything before New York, I'm just watching the price action. Anything after New York, you can see exactly what happened. Price went straight up, right? So New York is at 9:30, and that's at 9:30 a.m. New York time. And you can see on my bottom right, I've got it set to UTC -4. Obviously, if you just click New York, then you'll be able to follow this timing here. So 9:30 New York time is what I'm watching. Now, bearing in mind that the price is very bullish based off of the London session. You can see that price just continued. So I'm watching how these candles close. So price came back down. If the candles closed below this level here, this would have been a market structure shift, and then I would have stayed out of this move. Then you would have likely got a potential, price is very bearish, it's closing below, and it started likely to do something like this. But look how the candles failed to close below. This is your indication that this is just a liquidity collection, right? Price is just taking out the stop losses of people trying to buy this market, right? So it comes out, takes them out, and then these guys there's a lot of people who potentially could be selling in here, saying that yes, now price has broken, sells have been activated to push down, but look what happens. The market moves up. So it takes out both early buyers and sellers, late sellers in a way. Well, it's just in general sellers, isn't it? And then market just sort of holds in this area, and then price continues its push up. Now, where do we look and enter on this trade? If we drop down to the 1 minute time frame, bring it back here, you can see in short that price is sort of consolidating in here. I ended up taking a buy position based off once we ended up breaking and retesting this area here. So we bring it across, we have a fair value gap in here. This would have been your entry right in this area here. Your stop loss will be back below any of these lows. I wouldn't mind it. You can sort of increase the stop loss, but I just don't want price to sort of fall back down here, because if price would have sort of started to fall back down towards these lows, then it's just going to be a sort of consolidative. I don't want to be stuck into that sort of move, because price needs to just go because of the timing, and I just need price to sort of take out these targets. So you can see based off this 5 minute fair value gap right there, that's where we sort of entered, and the stop loss was below one of the prior lows on the 1 minute time frame. You would enter within this gap, stop loss below there, so that's a 40 points right there, and then this is your first target, which would have been the prior high right there. That was that move there, and then your next target would have been the key high up here, which was right about there. So then that was the let me just go back to the 5 minutes, open that back up. So that would have been that move right there. So that's that move broken down step by step, right? But this is obviously still not Wednesday we're talking about. We're still talking about Tuesday. So now when price continues its push up, look at this move, man. That's crazy. From Tuesday, we had such a big bullish move, right? And price eventually, overnight, went into the gap. Doesn't mean that price is now bearish now that price has touched the gap, because we haven't had any, bearish days, any confirmations. Look how price is sort of just using this bullish structure to push price higher. Yeah, it's still not breaking any of the key swing lows. Like, it may break some of the intraday swing lows, like this low has been broken by there, but it still went up. But the key swing lows, right, are still being kept intact. So undo all of this stuff. Just do that. Right. So now comes Wednesday. So I let all of this trade play out. Obviously we came to Wednesday and we're now starting, obviously our London session is where we end up looking at the market. Now price is already up here in this area, right, at London session. So again, I'm going to switch on the session liquidity, right? We want to see price take a low of one of the session liquidities before we look to get in. That's sort of what I look for, right? Now you can see that London session liquidity, look to the right, you can see that price is now trading below it, right? That is one of the reasons why I ended up getting into the buy on this trade, because I expected price to continue to at least fill the gap, right? Look at this top green line, I'm going to bring it across. You can see that price is still got a decent gap, at least like a 50 pip gap before it fills the gap there. So we're going to start off by talking about the sell trade. Why do we look to sell this market in a bull market? So I was watching the market around about 6 a.m. New York time, you can see around about here, and I was looking to see exactly what happened around this area here. You can see that price pushed into this fair value gap. This is a 5 minute sort of little scalp, and you can see that right there, price tapped into this 5 minute FVG, right? It tapped, and then you want to see exactly what happens from here. Notice that my targets, the reason why I'm looking for sells is we have an equal low right there, right? This is, engineered sort of liquidity in a way, where price is sort of climbing up, but it's leaving liquidity on its way up. So this is sort of, I'm watching this low. I would like to see price at least target this low here. So then price pushes up into this 5 minute fair value gap, right? You then wait for a displacement move where price ended up moving down, and then on top of that, you wait for a price to close below the prior low, right? And you can see right here, price closed below that. Now, where would you enter? And it's pretty simple. If you guys are following the 2022 model of ICT, quite simple. You enter in the 5 minute fair value gap, your stop loss above the high, right? You have double 5 minute fair value gaps here now, so price should stay below there. If it doesn't, you get stopped out. It doesn't matter, market continues. So essentially, we entered around about, I believe it was like the midpoint here. So it was this, using this inverted fair value gap as well. So I ended up entering a little higher as well. Had multiple entries in this level. Stop loss above the high right there. And where's my target? That's my target right there, right? So it's a quick little scalp. Again, I did enter after price sort of started slowing down a little higher up here. But I'm just going to take the average entry here. And you can see that once price tapped in there, it went back down, so that's 1.5. I ended up catching a 1 to 2R on this trade, and then took out this target. I wanted to get out of this move as quickly as possible. Why? Because where's my overall daily target? And this is what I see time and time again. Loads of traders with less confidence or knowledge in the market will look at this and be like, yeah, I'm going to target all the way down here now. Yeah, man, that's going to be my target. I'm going to hold. The market's about to collapse and it's going to go back down here to fill all of this gap up and, go back down to retest this major area here. If the market is very bullish, why do you have such a big sell take profit? It's still bullish. You haven't had any confirmations. Let's go to the 4 hour time frame and I'll show you what I'm talking about. Where are we? We're around here. This is the area. Look at these 4 hour candles, right? They're very, very bullish. Now, how many sort of big bearish candles do you see in this area? None. So we're still very, very bullish. Price is still respecting bullish structure, and we haven't hit a key level yet for price to sort of, reverse back down. So again, I want to get out of this move as quickly as possible, which I did. So I'm happy with that. That's a 1 to 2 R, so that would have been 0.5% risk, 1% take profit. So we ended up taking that profit. Obviously, what ended up happening was the market absolutely collapsed even further, right? So what? It doesn't matter. Yeah, if you held this trade and placed a stop loss entry, you would have managed to catch it a bit more, but I just wanted to take the full profit there and then, just in case price reverses. Right, so that's the first target done. Now, where's price going? It's pulling back. Does this mean that market's now going to sell off? It could have meant that, but I still am respecting this order block over here. Now, why am I looking at this order block? Let me drop to the 15 and you'll see it a lot better. Notice that when the market opened up during Asia session, price pushed down and then broke out, right? And now all price is doing is just retesting this area here. I'm expecting these sort of bearish candles to hold price up, right, as support. So this is where my support and resistance sort of strategy part comes into play. And I'm watching the last bearish candle of this sort of order block to hold price up. So price is in this area here now, and it has already taken session liquidity. Remember I told you about the session liquidity? Look at that low. This is London session, right? It's marked with a box, very clear. And look where price is now trading below. It's collected the London session liquidity as well. So we have another tick. It's in a bullish market, another tick. And now we need to wait for some PD arrays to set up so we can enter. So what do? We drop down to the 5 minute. This sort of trade that I took, when looking back at, obviously in hindsight, and I will happily say what I thought after the trade played out, there would have been a better entry for me to get in, but I ended up being a bit aggressive and I entered on the 1 minute time frame, right? So let's have a look at where you could have entered on the 1 minute. So you can see right here, we had a big push down, right, into this area. Now 8:30 is hit. Remember what I told you about that 9:30? Let me mark where that 9:30 candle was. 9:30 is here. So anything after, you want to look to enter. So what ended up happening was you could see that price broke out of this little push down and broke out and closed above. So this tells me that price is very, very bullish here still. It's broken a swing point level. It's closed above it. Now when price sort of returns back into this range, look to buy. And where would you buy? At a potential inverted fair value gap or a fair value gap, right? So I was using this as my inverted fair value gap. You can see right there. I'm going to remove the green box right below. This is my inverted fair value gap. I'm just going to move that across just so you can see how significant that was. I'm going to place an entry right at the top of it. Obviously, it doesn't need to fully fill it or anything. Obviously, in this scenario, it did, but sometimes it doesn't have to. Hence why I just enter at the top so I don't miss the move. Stop loss below the low, and now we're involved in this trade. Now look at what happened. Price moved up and it moved back down, and it kept pushing down. Obviously, we had some news, I believe, around this area here. Now, I knew that I was going to have to hold in drawdown. Right now, I'm in minus 50 pip drawdown, right? And I knew because I had 100 pip stop loss. Who's going to be panicking when you've already calculated the risk at this level here? Why are you panicking when you're in minus 50 pips? That's like 50% of what you overall risk. Say if you risk 0.5 over here. Oh geez, this is so bad. Say if you risk 0.5 at this level. Over here, you are at 0.25. So if you knew you were going to risk £50 or $50 over here, right now, this is at 25, right? So you shouldn't be panicking because you already know that, right, I've got £50 on the table. If it's at 25, it's all right? You shouldn't be panicking at all. You'd only panic, and I'm going to make this very clear, you only panic if you have over leveraged. If your 100 pip stop loss is, like 2, 3, 4%, and now it's at minus 2%, and you're panicking because you haven't saw those numbers before. Now, I'm not panicking at this point because I know that still, if this stop loss gets hit, I'm done for the day. Leave it. This market's not going up. and it should go up from here because we had a break and now prices come back down. We've entered and now we're waiting for some structure breaks. You can see that once price after 9:30 pushed back into this area, I'm watching this final 1 minute fair value gap. See, you just mark these fair value gaps and you're just looking for price to not close below them. This is the final one. If price closed below here, I would have been like, yeah, price is not going up. But look how price just tap and then just started to move up from here. So this is my final line of defense. This is what helps me in drawdown as well. Obviously we all go into drawdowns. I'm not afraid to say that. I don't have sniper entries all the time. But when we are in drawdown, this is what makes traders, actual traders, the way you put your levels and saying that, right, if price does this, then expect this. If price holds on this 1 minute fair value gap, right, then we should go back up, hopefully. So you can see the price started to push back up. We ended up getting a breakout from here, and then price came back to retest, and from then we can see that price pushed up at least a decent, let's see where we were, 130 pips, right? So at this point, remember what I told you about the risk to reward. At this point, you are, remember, you've risked 100 pips, and this is 50. Oh, I should really type this out. This is $50, right? And now if the trade's gone 100 pips in profit, you are plus 50. So it's at this point where you can feel free to take half if you want to actually take some money, right? Or if you want to hold it. Again, if this is a 100k account, that would have been 500 and you would have been plus 500. If you're happy with 500 a day, you're done. You can take the profit and leave it. But obviously our main target is back above here. So if I undo all of this, you can see exactly what happens now. So now, remember when I said that in hindsight, I would have found a better entry for us? This is where that better entry would have been. On the 5 minute time frame, you can see over on the left here, there's no like major displacement candles. There's just like slow climb up, and then price pushes back down and then climbs up here. The main displacement candle I'm talking about, the left of fair value gap, is right in the middle of my screen, right there. Remember what I said on the previous trade, right? Swing point, as you can see right there. Price closed above the swing point, market structure shift, yeah. Fair value gap, right there. And that is where you would have entered, stop loss below this low. That's what I was looking for. No, that's what I would have looked for if I wasn't actually in the trade already. Because obviously I'm in the trade and my risk is on the table. I'm not going to look to scale in here just in case it falls down. Yes, you could have scaled in at this point, but I wanted to see price push up, right? Now, when price came back down here, this is a nasty drop, right? Let's see how many pips this dropped. This dropped 100 pips back down. How many people, let me know in the comments, how many people got stopped out on this buy move with this move back down? If you didn't enter here and you entered like somewhere in this range here, you would have been stopped out around here. A lot of people would have got into sells thinking that, yeah, this market's not going up. It's now retested this area here and it's now going to fall back down, right? But again, look at your fair value gaps. You're not using them properly if you don't look at them like this. Drag it across. This fair value gap, there hasn't been a candle that has closed below it. Look, price is tapped. Constant encouragement or the mean threshold of this fair value gap right in the middle, right? If I put the mean, the middle line on this box right here, look at this middle box. Can you see how these candles respected this middle line? Did price close below it? No, they respected the middle part of this fair value gap, right? And then pushed it back up again. So remember the same thing I was telling you, swing point, fair value gap. You move that line up here, swing point, fair value gap. And this is the one I sent on the free channel. This is what I was telling you guys. So this is the one I said, look for scaled in entries around here. We're at that same point now. So bearing in mind, this trade now, right, when price has now gone back up over here, I've bought this stop loss to entry because I'm looking to get in a scale in entry. So this trade is now risk-free. It's running risk-free, and I now can look to get in on the second entry, which was slap bang in this fair value gap. Look how high price pushed up first and then immediately came back down. So you don't have to jump in on the move. If it's going to go up, it doesn't matter because I'm already in a trade at the moment. So I'm not FOMOing, no, nothing. I'm still going to make money. right? But the fact that price came back down into this area, respected this 5-minute fair value gap, tells me a lot, saying that, look, the market structure is clean, bro. It's coming back to respect some levels. Your entries there, your stop loss is below this fair value gap. You don't want price to come back into this now, right? So pretty much we're scaled in, another 50 or 500 pound added, and then the target is this green line again. We drag them both across, and the rest of the trade plays out nicely. I believe that was there. Yep. That was the trade. So I'm happy to take this high out, which is right here, and then price went to go and clean the gap. So you could have the take profits here at this high. Can you see the high of the day? Price continued pushing up the high of the day. That was my target, and I took the profits right there. So pretty much step by step broken down for you guys on how we ended up catching this move live. We got the sell, we got the buy, just like that. I believe this was a 3% in total. So you got 1% there, 1% on this one, and then a final 1% there due to that 1 to 2 RR. So fantastic trade right there, and that's pretty much it. So if you guys enjoyed this sort of breakdown video and you want me to do some more just like this, any improvements, obviously this is my first sort of actual breaking down trades step by step. So I may be quick in terms of how I delivered this approach, but this is not a sort of beginner level. Again, as I tell many of the students in the group time and time again, that if you don't understand this, watch ICT 2022 Mentorship Fast, then you'll start to understand the language I'm talking about, and then you'll sort of be able to follow on how we end up taking these trades, live throughout the day. Now this Wednesday trade was very, very good. As you can see, that price pushed back down and then cleared the gap, and then price continued its push up here, and then you'll see that price came back down, took out these lows, and what happened after Trump decided to do his little tweet, price continued its way back up. So as I'm saying to many of these people in the groups, that yes, you can feel free to sell this market. It's not a problem if you sell, but you want to be on the side of the highest probability, right? If you're new to the market, your better chance would be buying this market. Why? Because if you bought and had a big ass stop loss, your buys are more likely to hit your take profit and go up than your sells actually going back down. I had a signal. Well, not I had a signal. One student sent me a signal, right, where it was like, he sent it to me saying that, bro, someone's selling this move and look at it drop crazy, right? And I think it was a sell from this move right there. He sold this move. Let me just mark it up, right? This is going to be quite important. So I'm going to mark this right. I'm going to remove all of these because I've already explained it, right? He said that he's selling this move, stop loss above here, and his take profits like down here, right? And I was like, no, his stop loss is actually up here. It's like a 300 pip stop loss. I'm like, what type of trade is this, right? Because if you've risked $50 or $500 on a 300 pip stop loss, right? So let's just do this as 500 because people like to look at numbers, right? If you risk $500 right over here, let's make this bigger, right? You're expecting 300 pips to make you $500, right? Like that. Now, what's the likelihood of this selling off 300 pips, right? Obviously, it depends where you enter. Yes, if you entered up here, you would have got that 300 pip move. But if you've entered here, the likelihood of this hitting that take profit, at least a 1-to-1, is very, very low. Whereas if you bought and did the other way, right? If we bought at this area, let's flip it completely on its head. And if we bought at this area with the 300 pip stop loss, right? With the 300 pip take profit, well, look at what's more likely to stay in profit and go to and hit your target. And obviously it wasn't just that. That would have ended up taking it out from there, but you still caught a decent 1-to-1 right there, and you would have saw price come back down to take profit at your entry. But that's not the point, regardless. But this is what I'm trying to say. This market, very bullish, and I'm going to explain during the weekly forecast on where it should be going next. But you can see very, very bullish, no big bearish candles, right? Price is only just liquidity swept and continued its push up. And then the next targets you want to be targeting are these highs. So that's pretty much it for this video. If you guys enjoyed, don't forget to leave a comment in below on how I could improve, or if you learned anything from this. and this is all free stuff. I'm happily giving my strategy for free because I think, you know, people deserve to learn for free. It's just education, and it's just when it comes to the execution, this is what's tricky, and the mindset is what people need to work on. So that's pretty much it from this video. It's Always FX. Peace out.